Welcome everyone. This week we're going to discuss a question that I get probably most often from individuals that are sitting down with me to discuss retirement, and that's how are we going to generate income off of my portfolio once I retire? My name's Jacob Tim, and I'm the Director of Retirement Planning here at 10 Capital. And like I said before, the number one question that I get when I'm building a retirement plan for a client is, how are we going to take this investment portfolio and turn it into an income stream? And that's a great question. And a lot of people just don't understand how you do that in a prudent way. Now, I'm going to tie this back to a video that we discussed earlier in the year. We called it the LIVE methodology. L for liquidity, I for income, V for volatility, and E is the expected rate of return. Those are kind of the four pieces that we really look at when it comes to retirement portfolios and how we construct them. I'm going to focus on the I today, so the income within the portfolio. And we're going to talk about how investing in the accumulation phase or the pre-retirement phase, like me, I'm 37 years old. Within my 401k, I want to be very growth oriented. I can't even legally touch that portfolio in most circumstances until I'm 59 and a half, so I'm not worried about income in the portfolio. Now, then we shift, and this is the hardest thing for some investors to understand, is we eventually have to turn that accumulation, purely growth-oriented portfolio into more of a distribution portfolio, or something where we're going to rely much more on how do we create income. Now, the best way I can sum it up is we do that through dividends. Some of you really understand dividends well. For some of you, it may be a new concept. In terms of defining what a dividend is, think of it as a sum of money paid regularly by a company if you own their stock, or by an investment if you own a mutual fund made up of numerous companies. Dividends are paid to shareholders out of the profits or the reserves within that specific company or specific investment. So dividends are tied to the number of shares that you own, not the value of that share. So when we focus on income in the portfolio, in the distribution phase of someone's life, think of that as retirement, we want to focus on how many shares do we own and what are the dividends that are being produced off those shares. Now, this can be kind of complex. So what I want to do is make it as simple as possible. And the way I do that is literally by drawing circles. So to help understand how it looks both pre-retirement and post-retirement, we start off with what we call the accumulation phase. And as we said, that's someone who is pre-retirement, who's looking for more pure growth in a portfolio. So if you ask the average person, what is the US stock market return on an average basis? A lot of people could tell you that it's roughly around 8%, and that's correct. Now, the market is anything but average. It's very tough to control whether or not one year we're going to be up 20%, down 10%, or anywhere in between. But there's two components that make up what we call total return, that average 8%. In the US stock market, about 6% of that total return comes from growth. You buy a share of a stock at $10 or a share of a fund and it goes to 11 or 12 or 13. It grows. And about 2% of that total return come from dividends in the portfolio. So as we talked about, ownership in a company or in a fund, you have a certain number of shares and each one of those shares pays you an income stream. So this pre-retirement or accumulation model, that's roughly how I invest in my 401k. I'm okay with the volatility that can come from focusing on growth within a portfolio because I'm not using these assets anytime soon. I'm not going to be touching my portfolio. So I can handle more volatility, or what we call the up and the down that you can experience from the market. Now, when we shift to more of a retirement portfolio or a distribution model looking to create income in the portfolio, it's not that we don't want total return. The goal is still to grow our portfolio. We want to do it in a more prudent way that's tied to income, but we still want to grow it. But the focus should be much more on how do we add dividends to our investments. Now at 10 Capital, we do that through global diversification, having access to the best of breed investments around the world, not being tied to any specific companies so that we can go find all of the investments that we really have vetted and find to be prudent investments within a retirement portfolio. But to break it down and make it simple, we want to focus a lot more of the attention in a retirement portfolio or someone who's at the distribution phase on the dividends. because those dividends are tied to the number of shares you own, not the value of that share, which means that your investment portfolio can move around with the market, and we know we're going to have a consistent income stream because we still own the same number of shares that we did before. The best way that I can wrap it up for you, and I'll tie this back to the video Ben did last week when he talked about, rental properties and passive income. I'll use a real estate analogy. If you had a $200,000 rental home and you had a great $1,000 a month renter in that rental home, you'd be pretty happy knowing that you were going to get that paycheck on the first of every month. Well, let's say you fast forwarded a year and you appraised that rental home and it was only worth $180,000. So it went down in value. Now you wouldn't be happy, but at the same time, you certainly wouldn't go tell your renter that they owed you less money that month. That's the way your portfolio would work when we focus on dividends. Those dividends are tied to the number of shares you own, and they're going to stay steady regardless of what the market cycle does if you're being invested the right way. Thanks for tuning in this week. We always appreciate you watching these videos. We look forward to seeing you next week, and have a great weekend.